Hello. Tonight, the big news tonight, I don't know how big it is, but the I made a decision that for chapter 4, I'm just going to give you guys an accounting cycle to do. That'll be the third accounting cycle, and I think that's probably one of the better things to do because it kind of wraps the whole thing together. I was going to do a practice test, but I was looking through the questions are just all they're just mundane questions. It's not going to give you guys any practice or anything. So anyway, the more you do something, the better you get at it. So I'm going to give you guys after class, I'll send out the chapter 4. And again, it's going to be similar to the problem 1 and problem 2 in chapter 4. There will not be a classified balance sheet on it. And part of the reason for doing that is so that we can spend more time on chapter 3, which is one of the more difficult chapters in the book. So we'll get started on that tonight. What I'm going to do is after class, for those of you that need help on the problem 2, I give you that as homework. For those of you who need help on problem 2, if you want to stick around after class, I'll help you go through it. If you already turned it in, obviously, there's no reason to stick around after class. But I will send out the exams after class so that we can get started on. You can only write that down. It's always better to see it in writing than to have someone tell you about it. So here's what we're going to do tonight. So tonight, we're going to watch little doggy dance. Okay, when that's over, then we're going to the accounting cycle problem. And again, my real aim in that is to give more practice on it, and it helps get familiar with T accounts and all that kind of stuff. Okay, second thing, I'm going to start chapter 3. And chapter 3 is on adjusting entries. And we'll spend a little bit of time on this one. Yeah, it's one of the more difficult ones, so having a little extra time to do it can only do us good. So after class, if you have not done the chapter 4 handout problem 2, I'll stick around and go through that if you need, or if you just need to, if you have any questions on it, just ask me at that time too. Also, okay. Let's go ahead and get started. Let me ask: is there anyone that does not have the chapter 3 the email that I sent out? By the way, yeah, question?
I was checking now.
Oh, okay. Let's see. Blackboard is taking a really long time today. The handout is also available in Blackboard. Let me see if I can. Okay. I'm going to show you guys something else. Let's see here. Blackboard. Yeah, it looks like it's not always going through here. Okay, I'm going to try it one more time. This is the third time. Actually, before I do that, let me share the screen. First of all, this is the screen I get when it doesn't go through. So yeah, I do have a link. If you go to, or a tab, it's, I don't know how far down here. It's underneath the ebook on the left-hand side. Let me zoom in here a little bit. If you go down to here, student email problems, and if you're having these, and some of you obviously are because I'm getting error messages. If you go to technology support, it's kind of this is kind of buried in the Roosevelt website. But click on technology support, and it kicked me out. And you get something that looks like this. And then click on submit a ticket down here. And just tell them you're not getting your email. That your teacher's getting error messages when they try to send you the email. You can do it as a student, obviously. But yeah, so go into that, click on that on the support. But let me try this a third time. Okay. Let me try it different.
I got it.
You got it? Okay. Well, some people still haven't, so I'm going to try one more time. And if I can't get it, then you guys will have to go to the, or you can send me your a private email or your work email. I can send it to that too. But let me try this one more time, and we will see if we can. This doesn't look good. it's thinking again. Oh, it looks like it went through. Okay, it looks like, see, third time. See? Okay, let's go back to the Zoom meeting. Oh, let's not do that. Hold on. Now I'm all confused. Okay, so check your email, see if you get it now. It says it went through. Now, that doesn't always mean it did go through, but hopefully, I'll put it this way: I didn't get any error messages on it. So, which is better than the first two times. Okay, well, if you didn't get it, see if you can get into Blackboard. If you get into Blackboard and let me make sure it's in there. Wait, did I put it in there? I put it in Blackboard. I am lying to you guys. I'm lying. I mean, okay, now they're in Blackboard. All right. Again, if you don't, I should check in to see if we can have. It would be nice if we could put in extra email. 2 emails from. I know that they frown upon that, but it's kind of like they get too carried away with security, and at some point you can't do anything. It's like saying, "Oh, I don't want my car to get stolen, so I'll take the wheels off." Well, it's really not a car anymore. You can't. Okay, let's go to. So the handout. Looks like this. Introduction for adjusting entries. Now, adjusting entries are really the same as any other entries. There's nothing magical about them. What is different about them is that they're made at the end of a period usually, and they're made to make adjustments for revenues or expenses. So it's sort of like this. This is financial statements are made for a specific time, and it's sometimes called an artificial period. And actually, I'll leave it out for now. Okay, so usually it could be a week, a month, a quarter, a year. Some what they would call artificial period of time, in that the transactions don't necessarily fit into that period of time. You may have, I think, an example of a truck for 5 years. It goes over 5 periods. It doesn't fit into one period. And so that's why, and when we talk about, like, you buy a truck, well, why isn't it an expense? Well, it will be an expense, but it'll be spread out over 5 years or however many years we're going to use that equipment for. So the problem is that we have these artificial periods, and the transactions don't always fit. And so this is what we're kind of talking about here. And let me stop this. Let me stop this. I can show you how it kind of looks like it. So if these are the transactions, and you know you pay for insurance and it lasts a year. You pay for you know, you buy a truck and it lasts for 5 years. You buy, you know, whatever. You have all these transactions that are going on. And then you have these artificial time periods, you know, beginning and ending of the year. So maybe this is beginning of the year and ending of the year. So you have these transactions, and they could be, I don't know, say revenues and expenses. They're going to be either revenues or expenses. But, you know, and some of them take place fully within the year, but a lot of them don't. You know, and so that's what we're going to try to make the adjustments just for these, you know, to make sure that we get the revenues and expenses. I'll say this is revenues. These are expenses. So I'll say the yellow are revenue. So if we're trying to get these all in the correct period. So that's really all we're doing with the with adjusting entries. And it comes out, you know, like I say, you may have a truck that lasts for 5 years or whatever it is, and you may, you know, have other things that last, you know, all this stuff going on. While some of them might fit within a period, you know, some of them don't. So we have to make an adjustment. Okay. Let me go back. Okay. Accrual basis accounting, blah, blah, blah. Okay, let's go down to the stuff that's more important. Okay, accruals. Accruals are that the transactions that they have occurred, but the cash has not changed hands. I don't know why have been occurred. I should probably just say have occurred. Putting in some extra letters there. Right, extra words. See, other instructors are cheap on the words. They don't give you these extra words that I give you. Okay. So they're not have been occurred, but they have occurred, but the cash has not changed hands yet. Okay, so for example, let's say that the rent is 6-month rent. But in order to get you in the place, the owner says, okay, you don't have to pay me until June. So this would be a accrual. The accrual is that the cash has not changed hands. Now we moved in and we're renting the place. So that transaction has happened. However, we just haven't paid the cash yet. So that's an accrual. And accruals, the usual one that you'll see will be payables or receivables. You know, something has happened. But the cash has not changed hands yet. Make it red, I guess. So that's an accrual. The deferrals are sort of the other end. That's when the cash has changed hands. However, the transactions are ongoing or going into the future. So this could be prepaid insurance, for example, or some kind of prepaid. That's what this would be, prepaid rent. Here this would be prepaid rent. It could also be, when on the other end, it could be unearned, whatever. Someone pays us ahead of time, and we then have to do the work. So they pay us first, and then we do the work. So a deferral is when you receive the cash ahead of time, but you're going to defer it till future use. So even though we got the cash, let's take unearned revenue. Even though we got the cash, we're not going to count that as revenue until we earn it at some future point in time. So you defer recognizing it. Okay, so some helpful hints. Let's make those green. Adjusting entries will always have, adjusting entries will always have either a revenue or an expense account. They won't have both, but they'll have one or the other. So every adjusting entry, by the way, they're just like normal journal entries. There's nothing inherently different about them, but we're adjusting our book. So this is, so revenue and expense, I have a revenue expense. And adjusting entries will never have cash. And let me modify my thing here. So if they are an accrual, that means the money hasn't changed hands yet. If they are a deferral, we're deferring it. So at the beginning of the transaction, the end of the transaction, whatever they are, they could be a deferral or an accrual. But then they're never going to have anything to do with cash. The cash is either paid before or it hasn't been paid yet, as in the case of an accrual. So if you actually look on the line here, there is no cash being paid at the beginning or year end here. I mean, paid ahead of time, it could be paid later, but when we're making the adjusting entries, there's no cash. Now, this is only for adjusting entries. Obviously, we do use the cash account, but when we make the adjusting entries, there is no cash. It's either been paid ahead of time or it hasn't been paid yet. All right. What am I doing here? Let's go back to the handout. Okay. Well, let's jump into these. Okay. That looks funny. Something funny there. All right, let's see. Okay, so prepaid entries. What just occurred to me? The color that's missing from my palette up here is orange. There's no orange. Okay. I'll just have to live with that, I guess. Okay, so number 2, we have a prepaid entry. We prepaid for a insurance policy, which, as you know, is usually how you pay for insurance policy. You pay ahead of time. So we purchased it for $1,200 cash. The cost of the insurance is $100 a month. And you could have figured that out by how? How do you know it was $100 a month?
This is 1,200 for a year, so you just do 1,200 divided by 12.
Exactly. Yep. So reinsurance was $1,200 divided by 12 months. Okay. Now the little table down here, for this first one, it's already filled in. Now, notice that they bought this on April 1st. So they're going to use it for all of April. So coming down here, we have April, blah, blah, blah. So they've used up 9 months worth of insurance. So we are going to come here and say, okay, okay, so the insurance used would be the dollar amount. Get this a little closer here. 9 times 100 is 900. Oops. Okay, so how much of the insurance was used? We used 900. 9 months went by, $100 a month. This is from up here. Oh, later on you got to calculate. But okay, now for the difficult part. So we have prepaid insurance. One of the accounts here. And every adjusting entry is going to have either a revenue or an expense. Which one do you think we're going to have in this case? A revenue or an expense? Is insurance going to be a revenue or an expense?
Expense.
Yeah, it's money going out. So this will be insurance expense. Oops. Okay, so we got our two accounts. Which one is going to be the debit?
Prepaid insurance.
No, not in this case. Now, it was a debit when we first put it in. Up here, prepaid insurance was a debit. But now notice what we're going to do. We're going to reduce the prepaid insurance. So we're going to reduce it down. So the expense will be the debit. And if I just did something wrong here. If you oh, look at that, we can actually see it. If you you call it, expenses are always debits. Okay. See, look, I add extra letters. See, your other cheapskate teachers don't add those extra letters. I add those extra letters, no extra cost. Okay, so insurance expense will be the debit. The prepaid insurance will be the credit. Prepaid insurance is an asset. And it's going down. Now, the tricky part. Okay, so prepaid insurance has a 1,200. Oops, too much. 1,200 balance in there. So what is going to be the dollar amounts that we put in these accounts? How much of that 1,200 did we actually use up?
900.
Yep. So 900 of it was used up. Okay, now we put it into our accounts here. So the prepaid insurance was for 900 credit. And insurance expense was 900 debit. And from chapter 4, 1,200 minus 900 leaves 300.
Mm-hmm.
So this is going to be the ending. Now you don't make a journal entry for that. You know, sometimes I say, well, you know, do we have to put that on the books? No, no, no. It's just whatever's left over. So the 1,200 was in there. You took out 9, so automatically there's going to be 300 left in there. It's the ending or what was not used of the insurance. And so this is going to be. I'm going to mess this up. Hey, like I've done that before. So this prepaid insurance, this will be on the balance sheet. So the balance sheet will have the prepaid insurance, and we'll have it for this amount. This will be the ending amount in there. And the income statement will have the insurance expense for 900. We used up 900 of it. And so this 300 will go into the next year, whatever the year. No, I do know what year that is. It'll be into 2022. 300 will continue into the next year. Any questions on that? Notice something here, though. Well, first of all, there's expense, the expense or revenue. In this case, it's expense, but there's also no cash. And the adjusting in regular entries, journal entries can have cash. Have them up here, had cash in them. But in the adjusting entries, keep doing that. Stop that. All those are connected. What idiot made this thing? All right. So in the adjusting entries, you're not going to have any cash. Okay. Save that just for fun. Let's go to page 3. Page 3 is similar. One-year insurance policy this time is for 3,000. And to get it, how much does it cost per month? We divide that by 12 months. Oops, that's not a 1, that's a special character. So that's how I got the 250 per month. That's all this came about, this 250 here. Okay, now here's the tricky part, though. It was purchased on October 1st. Now notice notice it's filled in down here. So the question is, how many months worth is used up? Or how many months did we have this insurance policy so far?
3.
Yep. We had it for all, notice we bought it on October 1st. If we bought it at the end of October, we wouldn't count it. But since we bought it at the beginning of October, we used it all through October. 1, 2, and 3. So this is, yeah, I highlighted all before. So it's going to be 3 months. So the insurance used in dollars
$750.
how much?
$750.
Yep. So 750 of it was used. Hey, keep forgetting to do the highlighting and all that stuff beforehand. Insurance used was 750. And for 3 months, $250 a month, so $750 was used. Coming down here, this stuff will be all the same. So prepaid insurance. Okay, and the account's going to be the same. And it's going to be for how much? So how much are we going to make the journal entry for?
The expense will be 750 for a debit and prepaid is for credit 750.
Yep. Perfect. So this is 750. 750. So that's how we got those. And so this will be 750 now. One of the things that you can always get asked is how much is left in prepaid. So 3,000 minus 750 is what, 2,250. Oops. So this is the ending amount that's left. And the insurance expense will be 750. Not going to be there though. It's going to be a debit. So this will be on the balance sheet. And again, no, oops. No cash. Okay, let's go to page 4. Page 4. It will be quiet. What do you guys think about this one? See if you can figure it out. Nothing's figured out for you. You have to do it all on your own. realize I've been talking to myself. What oh, for crying out loud. I gotta stop sharing for a second. Let me do it. By the way, I figured out how to disable that. So I'm gonna start disabling that stupid drop down screen thing that annoys me to no end. Okay, so what did you guys come up with for, how much is it per month?
$50.
Yep. Okay, so it's $50 per month. So this is $50. And the tricky part, how many months?
5.
Yep. And so 250. Okay. Insurance is 250. Okay. 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 All right. Same journal entry. So the ending was 350. Too far here. Ending was 250. No, 350. Expense 250. And that's it. Again, no cash. Okay. Unearned revenues. This is when someone pays us ahead of time. And you'll notice that the unearned revenue really isn't a revenue at all. It's a liability. So they pay us ahead of time. have electrical work done on a new building. Okay, so we're gonna do some electrical work for this person, company, whatever it is. And they paid us $3,400 in advance. And so we will pick that up as a liability. It's unearned revenue. And if we don't do anything, we got to give them their money back. Now, hopefully, we will do the work and earn that revenue of $3,400. So at the year end, oh, excuse me, I just bored myself. All right, at year end, 1,800 of the revenue had been earned. So we didn't earn all of it, but we earned 1,800. So make the jump. Okay, so here's what we have here. We're we got the cash, so they already paid us. So we have unearned revenue, which is a liability. For 3,400. Now we want to know. Oh, okay. Well, let's stop for a second. So this is unearned revenue. So are we most likely going to have, on adjusting entry, are we going to have a revenue or expense?
Revenue.
Revenue. Good. And it doesn't matter that I misspelled it because we're not going to use it anyways. Okay. So this is going to be revenue. So this will be revenue. Now, revenues by definition are earned, but I'm going to put this on here anyways. There's nothing wrong with putting on earned revenue. Okay, so these are the two accounts. So which account do you think is going to go where? I'll give you a hint, and that the easiest one to figure out is going to be the revenue. Because revenues are always
Debit.
Credits.
close. Yeah, credits. So revenues are always going to be credits. So, oh, by the way, I do have this. I think, yeah, there it is. So I attached this thing on there. So if you always look at that too. And I put those on pretty much, these on pretty much everything. As you guys, if those of you that are accounting majors, as you go up in accounting, you're probably not going to need it, but at least for us starting out, it's a good thing to have. Yeah, so the revenues are going to be credits. Here. Oops. There we go. Okay. So the earned revenue, and again, you don't have to put this in there. The earned, it's by definition it is earned. How much? How much of the revenue do we earn?
$1,800.
Yeah, they tell us that so 1,800 had been earned. So we're going to put that in earned revenue, and we are going to take it out of unearned revenue, which is a liability, and it's going down. with a debit. Oops. Okay. So in other words, so this liability that we have, here we had liability of 3,400. We're not going to reduce it by 1,800. We don't owe them 1,800 anymore. Now we're going to recognize that, and that's going to be picked up as plain old earned revenue. Okay, so it'll look like this. Unearned revenue. Oh, by the way, this is correct, but we're gonna, if you go down here, unearned revenue. Decrease with debits. Okay, so this is decreasing it by 1,800. And the revenue we're picking up as earned revenue. What is that, 1,600? 3,400 minus 1,800. 1,600, okay. So we still owe 1,600 worth of work. So this is still owed. Oops. Yeah, we finished 1,800 of it, so we still owe for 1,600 of it. So this will be, this is the ending balance, the ending amount. So this will be on the so the income statement will pick up 1,800 of the revenue we earned. In the balance sheet, we'll say we still have a liability of 1,600 until we finish it. No cash. Now, there was cash in the original entry. And then actually, if you look at this, the cash was actually given to us on 11/8. So the cash is already done. So we're not going to do anything with the cash here. Will this be, how much of it have we earned? Okay, so that is unearned revenue 1. And let's go to page 6. Oh, there's an error in my handout. Page 6 does not have the unearned revenue heading. I'd like to say there's a reason for that, but the reason is I'm incompetent in making these. Okay, so let's go to page 6. So it's another unearned revenue one. A little bit different. Instead of telling us that a dollar amount, they tell us that it's 70% done. So someone, you ask them how much of the job is done, they say 70%. However they came up with that, there's a number of different ways to do that, but let's say that 70% done. So the question is, what do we do with that?
Multiply 5,000 by 0.7.
Yep. unearned revenue. $1,000 and 70% done. Equal 3,500. 5,000 times 0.7. Okay, so 70% of it is done, so that's the only way of saying that 3,500 of it was earned. Okay. The rest was kind of just like we did before. So our unearned revenue is a liability. Oops. And in that liability, we have $5,000. Now we have earned revenue. Okay, so our revenues are always going to be credits. Again, you do not need to put this earned in here. Wait a minute. I put it in just because board. So earned revenue, 3,500. And now we're going to take out 3,500 out of our liability. We no longer owe for that 3,500. So it's unearned revenue, which really isn't revenue at all. It's a liability. So unearned revenue is a liability. Now going down by 3,500. Again, I'm going to say it again, no cash. Okay, so unearned revenue is 3,500. Debit. So this means that we still owe 1,500. And earned revenue is 3,500. Oops. So on the balance sheet, we'll show we made $3,500. We earned it. And on the balance sheet, we will show that $1,500 is still owed. Any questions on that? Okay, well, we will stop right there. So we'll stop on page 6. Save this. Stop sharing, and I hate sharing anyway, so. Oh. Okay, so we're going to stop there. Now, if you have not turned in the problem 2, chapter 4 problem 2, that's what I'm going to work on next. So those people that want to, if you want to stick around, and we'll work on problem chapter 4 problem 2. It's that accounting cycle one. And the reason I want to do that now is that the test that I send out tonight will be based on that. So I want to make sure that we all are on the same page with it. So if you have not completed that one, stick around. If you need any, if you just need any guidance on it, like if you can't get the balance or something like that, stick around too. I'll, we'll see, figure out where, why it's not balancing. But otherwise, so if you've already turned in the chapter 4 problem 2, you're free to go. Well, you're always free to go, but you don't need to stick around for this. You can stick around. We're happy to have you, but you don't need to. And I will be sending out the. I'll tell you what. We'll take a little break right now. So those of you that want to stick around, take a little break. And during that little break time, I'm just going to go ahead and send out the exam so that those people that have already completed problem number 2 can get the exam now. All right. So any questions about this? So we're going to stop here. We're going to finish this up next class, and then do some other stuff in chapter 3. And again, chapter 3, as you can tell, it's got a lot of. It's not just journal entries; it's all this other calculation stuff on top of it. So it's kind of complex. So anyway, if you want to work on the chapter 2, or excuse me, chapter 4 problem 2, stick around. Otherwise, I will. Let's take like a 5-minute break, and I will send out the exams during that time. And hopefully everyone will get one. Cameras. So
I wouldn't get our hopes up about that.
Do file a ticket with them though.
I did.
You did?
Yeah. Well, I haven't heard anything for 3 weeks.
Send another one.
You said file another one?
Yeah. If you send that enough, they'll have to do something. And if you can give it your cell phone, that's also because I know when I did mine, we talked on the cell phone. Yeah. But yeah, because you're going to need it for not just this class, I mean for other classes too. Okay, so let me.
Professor, I got the exam if in case you're wondering.
Okay, you got it? Good.
Yeah.
Okay, is there anyone that did not get the exam?
No, I didn't get it.
All right.
I just sent another one. We're gonna see what happens. It's been working when I send everything. But I get every other teacher's email but yours.
Really?
Yeah.
I wonder if it's, well, I should check to see if the account is the same. Huh. Okay, so do you have a filter on it? You think? See, here's what I've been doing, and I thought that I did this because it happened in the past. I send it to individuals, and so sometimes I think that people have junk mail filters that say, okay, if it's a mass mailing, you don't want it, it's junk. So I'm not sure if that, if they're doing it to, I'm going to test it. I'm going to test it next time we have class. I'm going to test it, send it to everybody instead of doing it individuals. Because I used to do it by individual in the past because just for what I just told you. But if it's sent to the individuals, it's not shown. It doesn't show up as a mass mailing. But it could be that there's something else that's causing it to show up as a mass mailing.
Yeah, I mean, I don't have yeah, I don't have you on the list for the junk mail folder, so.
Yeah, but I mean, there's sometimes they look and they'll say, okay, this is mailed to a bunch of people, delete or whatever. So I don't know if they still do that, but that was why I would, and if there was like articles on it, that's why you, instead of doing, send to everybody, you say, send to an individual, but you include all of the individuals on it, so that each one gets an individual one rather than mass mailing. But did you got it?
No.
You're kidding. It just said it went through. Well, let me look at it. I get the wrong email. The email is BS, B Smothers 01. Is that the right one?
Can you repeat that?
Yeah, it says B Smothers 01.
Yep.
Huh. Roosevelt. Yeah, I mean, there's nothing in here that shows that you're being any different than anyone else.
Yeah, it's B Smothers 01 at mail.roosevelt.edu.
Yeah. Yeah, there's nothing in here that shows it being any different. Let me do this. Let me just go to my regular email account, see what it's this one. Because it may be something in Blackboard. And if it is, then I can contact Blackboard and say, okay, come on, this person. All right.
Yep, I just got it.
Oh, you did? Oh, okay. I haven't sent the other one. Okay. I'm not sure what's going on there. Because that one must have come from Blackboard. But if you say that a manually class that does it, then maybe I should, I may have been barking up the wrong tree here. Maybe I should be talking to the Blackboard people rather than RIT people.
Actually, Jose forwarded it to me, but then I got the one you sent.
Okay. Well, Jose may have a different version of it. So, yeah.
But I got the one you sent.
Yeah. Do the one that I sent. Jose's got a different one. Yeah. Okay. Okay. So let's see here. All right. Chapter. So let's go ahead and get started. Chapter 4. First of all, is anyone for the chapter 4 problem 2? Is there anyone that is just not balancing and you have a question on that? Okay. All right. Well, let's go ahead and pull up the handout. Get rid of this. One second. Okay. long last. Here we go. All right, so this is the I gotta do something quick. I'm going to use a checkoff sheet here on the side, so we got both on the screen at the same time. Okay. Okay. So you should be able to do a split screen on this to see both of them. And let me go back to. Okay, so what we're going to do is post these journal entries over here into the general ledger. And so we do that just by taking each one and transferring it over. Question? So this is the chapter 4 handout problem 2. Okay, so we're going to do so cash has a debit 3,000. So we're going to put 3,000 in cash. Make that red, I guess. And common stock. Uh, 3,000. So all we're doing is taking these and doing what we call posting. And the reason we're doing it, the journal entries are really quick. You know, this is an entire transaction. They just take the 2 accounts we need and forget about the rest of it. So these are very quick. The problem with journal entries, though, is you don't know how much is in the account. It'd be very difficult to look at these journal entries and figure out how much cash you have. You know what happened on any given transaction, but you really don't know what your total cash is. So that's why we're doing this, you know, the general ledger up here. This is ending balances. So we don't know how much is in cash. So that's what we're going to do. We're going to try to figure out how much is in cash and how much is in equipment and all this other stuff. And again, you can't really look on the journal entries because they're not. They don't even tell you the balances. I'm gonna do these in pink because I can't see it on my screen. You guys might be able to see it, but I can't. All right, so next we do cash, debit, and the debits and credits are important, so make sure you get on the right side, the correct side. So cash is 900 and revenue is 900. Okay, third journal entry, we have cash for $45. And let's make that green. So cash is 45. Unearned revenue is the credit for 45. So you kind of get the idea. All we're doing is kind of walking it down here. And doing each one. So utilities expense. Two. Let's make that color. And accounts payable 72. Equipment 3750. Let's make that. How about orange? That's probably hard to see. A little bit darker orange. All right. So cash or equipment is 3750. Cash is 938. And accounts payable is 2812. Accounts payable 1,125. Debit. Make sure you get the debits and credits right. It makes a difference which side they're on. Depreciation expense. This would be 5. And accumulated depreciation. 375. Let's make that dark red. Okay. Supplies. Oops, wrong color. Supplies. 700, no, 207. Cash 270. Cash is credit. Supplies expense. 203. Supplies. 203. Actually, if you look at this one is you kind of see what happened here. You know, this is where they bought the supplies, and then this is they're using up the supplies. Oops. So supplies expense, if you look at this, they used up 203 of them. So they had 270 in there, but they used 203 of them. So whatever's left over, we'll figure that out later. But that's how much supplies were not used up. Okay. Wages expense, 180. Cash. 180. Insurance expense, 108. Cash, 108. Let's make that one. That column. Okay. Cash is a debit for 315. And revenue is a credit, 315. Prepaid rent is a debit for 173, and cash is a credit for 173. Okay, so prepaid rent, debit 173. So they paid rent ahead of time, apparently. And cash. 173. Make that right up. Okay, unearned revenue 18, and then revenue 18. This is what we just did. So apparently they earned 18 of the revenue. So unearned revenue will be debited for 18. And revenue will be credited for 18. You notice the revenues are all credits. Notice the expenses are all debits. Okay, we have rent expense. And prepaid rent. This is, we just did this, we had prepaid insurance, the same idea. So rent expense was 87. And so we used up 87 of the prepaid. Oh, so this is what they all posting. So it's posting the journal entries of the general ledger. I don't know why they call it posting. I usually have a humorous accounting anecdote for all that kind of stuff, but I don't for that. Okay, so now what we're gonna do is go through each one of these and figure out how much we actually have. And we add up the debits and the credits, and the biggest side always wins. In other words, whichever side is the biggest is the one that we is whatever's left over stays on that side. Okay, so for cash, we have 3,000 plus 900 plus 4260. And we're gonna do the same thing on the credit side. $27.94. Okay, so our debits are 4260, our credits are 27.94, so we're gonna subtract them, and whatever's left over goes on the biggest side. So this will go on the debit side. All right, so 260 minus. So that is our ending balance in our cash. So how much cash we have? We have $1,466 in cash. So that's the ending balance in that account. And cash usually does have a lot more stuff running through you. If you mess up on an account, it's probably going to be this one, just because there's more chances for things to go wrong. Okay, now some of these we don't really need to do anything to get the ending balance. There's only one entry in there. Supplies, we need 270 minus 203, 67. Yep. Prepaid rent, 173 minus 87. 6. And again, these ones that are just onesies. I'm not going to do too much with those. Okay, revenues. $900 plus 350 plus. Accounts receivable has a little bit of stuff in here, so we have to be careful of this one. So we have 1,025 on one side and whatever that is. 2812. Oops. Let's start out with 72 plus 28. So 2884 minus 125, 1759. $45 minus 18 is 27, isn't it? Let me check this to make sure. Yep, okay. Retained earnings is 0. You need to put that in? No, not really. Okay, so this is our, oops. Do something here. There's our general ledger, and we're going to want to transfer that to. I'm just doing this to get on the same screen. So you know. Okay, so hopefully you see this. So what we're going to do, so the trial balance. This is for ending balances only. So for instance, for cash, we're not going to look at all this other stuff that's in here. All we're going to do is take the last number, 1466. And I think as I do these, I'm going to change the color on them just for my own benefit. Make them green, so I know the ones I've taken. Okay, so I got the cash. Equipment. Accumulated depreciation equipment. This is the odd one. This is the kind of an odd. We'll talk about that. Because it goes against the other equipment. All right, supplies. So. Prepaid rent. 86. Utilities expense. 72. Depreciation expense. 5. 5. 203. Wages expense, it became invisible when I did this. Uh, 180. Rent expense. Insurance expense. Revenues, 1,233. Accounts payable, 1,759. Unearned revenue. Oops, 27, but I didn't highlight. Common stock, 3,000. And retained earnings, 0. Do you need to put that one in? Probably not. Okay. So I think that is everything. Okay. So what I'm going to do is add them up. So both these sides should equal if I did this correctly. All right, so $63.94. Okay, so that is that's the debit side. Let's hold the credit side is as cooperative as the debit side. Yay. Now it's not 100%, you know, that you did the books correctly if the with the balance if the trial balance balances, but it's a pretty good indication that it did. Okay, now I'm going to do something. Let me get this back on to, so I can do split window here. Okay, so what I'm going to do is we're going to take okay, so hopefully this is big enough for you to see. But what we're going to do is go ahead and take these numbers over here and put them into the financial statements over here. So income statement starts out with revenue. Cut and paste it if you want. Me, I'm lazy, so I'm gonna do it anyways. Utilities, you can just copy and paste all of these. I'm gonna put negatives in front of these because these are actually, you don't need to do this, but these are actually money going out. These are net income. Is our net income gonna be higher or lower than our revenues? Hey, sleeping, you guys are sleeping. I'll talk quietly. Okay. Our net income is 208. Beginning retained earnings. Is 0, and that's because this is our first year in operation, and earnings are the same thing as income. I'll do this at the bottom, but earnings are the same thing as income. So when I say retain, that means that they kept the income in the company. Plus our net income. Minus dividends, we didn't have any, but we did have. And this will be our ending. And again, retained earnings, earnings are the same thing as income. So this is same thing as oh, do you want to do that? $208. Okay, now the, where's that thing would be there? So this cumulative depreciation, be careful, this is gonna get subtracted out. Minus 25. So okay, our liabilities. So 86. And our equity, we are common stock. $3,000 plus, remember our retained earnings, the ending retained earnings, that's the owner's piggy bank, and they put $208 in their piggy bank. So it's 3,208. Okay, so 1786 plus 3208. Yay! So that's it. And again, that's, these financial statements, where'd they come from? They came from these journal entries. They kind of seem like this weird separate thing, but they're actually, the same. They're just writing all the transactions. So the general ledger puts it into, you get totals out of the general ledger. The trial balance is, okay, what are just the ending balances? So we just want the ending balance. We don't care about the other stuff. And the financial statements put it into something that we can use to know if we're profitable or not. And, down here, how much do we have in assets? How much do we owe? That's all that comes in here in the balance sheet. So this kind of puts it into a format that we can actually use. It's hard to, you can't look at these journal entries and know if you're profitable or not. This could be anything. So, oops, too far. Okay. Question on that? All right. Well, All right, so yeah, if you have any questions on it, you can go ahead and email me. But anyway, that you're gonna use that as, if you haven't done the problem one, the problem one is a similar one. You can use the same thing we just did for that, and the exam, the chapter 4 exam, is just like that. It's a little bit tedious, but at the same time, it kind of hopefully you get the reasoning behind it. That we journal entries very fast. General ledger to get the ending balances, and it kind of gives you a picture too. You'll notice that it gives you a picture of what came in and what went out of cash and so forth. So the general ledger is getting the ending balances. The trial balance is just the ending balance. We don't want to know the details, just how much is in cash. That's it. And the financial statements put it in a kind of a context. Do we know? Are we profitable? How much do the owners have? How much do we owe? How much assets do we have? That kind of thing, which you don't get from the trial balance. The trial balance is just the ending balances of all the accounts. Question on that? Okay. Well, if there are no questions, then we'll call it a night. This video should be posted later on. Probably around midnight. It's been taking a long time for some reason for YouTube to process the videos. You get into them a little early. I try to post them right when they are uploaded. You just can't get the closed captioning until it's fully processed. It'll get there. It just doesn't always do it right away. Okay. Well, have a good evening, guys, and I will talk to you next week. I also have tutoring hours on Friday. My tutoring hours, I'll send out an email. I'm going to do my tutoring hours early because I actually have a doctor's appointment on Friday at noon. So the office hours will be moved up to 11. I'll send out an email about it. But then I also have tutoring hours at 6 p.m. on Friday also, or any other time that you want to, that works for you, we can set up a Zoom meeting. Okay, guys, have a good evening.
Thank you, Professor. Have a good night.
See you.